Hello traders, Gary Wagner here. It is approximately 11:30 in Honolulu. It is Monday, the 18th day of December, and this is the daily report for gold and silver. We have both gold and silver under pressure this morning. When we take a look at our current prints in terms of a cash market, 28.75, that is the cash silver. So it is under a considerable amount of pressure, and more importantly to me, it is below $29 currently. We'll get back to that in a little bit. We have gold trading lower off about $6 on the day, current print at 1592.67. That would be the cash market. When we look at March COMEX, we are currently at 1697.90, call it 1698. You've got a different kind of a candle forming there. First chart that I do want to get to this morning is going to be a daily chart. And you can see when we take a look at this daily chart that we had this nice move up the other day, but we're really not getting the follow through that I would have liked to have seen. Most importantly, when we take a look at this, we currently have the small body candle. We have been able to get up around 1603. I'm targeting resistance right around 1607. And what I'm basing resistance on right now is really this low right in here. There's that 1602. And you can see in terms of the high that we got in the cash market, 1608. And what we are noticing is that this bottom band right in here, which was support before, is turning into resistance at this point. In other words, that's the mark that we have to break. Now, the critical thing about the current trade that we're looking at is that it's absolutely a short-term trade. And let me explain why. I do believe that this market is probably going to have one more downside move, and that downside move is based on the fact that what we're looking at currently is this is a minor 4 right in here that we're currently in, and that minor 4 we've already had a subwave 1, 2, and I believe that this is 3. But here's the thing, as I put out yesterday, we were following along very nicely on this upward track. You can see that really right in here as the market formed a low in terms of a retracement. 38% came within those parameters, began to move up, but you can see that right in this area, this is a 113 intraday chart, it started trading sideways, and here's that sideways action. You can see a couple of things that tell you immediately it's sideways. First of all, you have these alternating colors. So it's going green, red, and that, of course, is indicative of a market that is trading within a very, very narrow band. The second thing is that it hasn't been able to continue on this upward track. And here's my issue with that. I personally believe that this market will have one more really solid clip down, and to do that I'm going to take our basic chart that we have been using, but I'm going to convert this into a 360-minute chart so that we have a more defined idea in terms of detail within there. And let me give it enough candles for that. And for this minute, as I said, I want to make this into a 360. So we're breaking up the day now into a couple of candles. And you'll see that it's going to look quite different now. This is also in Henkin format, which is a Japanese average. Henkin Ashi simply means a average chart. And when I say that, what I'm talking about is the fact that it draws the candles a little bit different in that it takes into account the prior candle. And here we are. It has just changed. And you can see we have gone to green. And the green signals that we are absolutely had a pivot point. But what we look for in these Henkin Ashi candles is a couple of things. First of all, the size of the candle is very critical. The larger, the stronger the trend. You can see that right up in here. You have this really strong trend. And then the second thing you're getting is this lack of lower tails. And you can see that throughout here. As the market will reach the top, what's going to happen is you will start to get these tails will reappear, and the size of the particular bodies will also begin to shrink. They'll get smaller. And that's what I'm noticing right here. Now, we haven't gone to red, but we have gotten these smaller candles, and we've done that at a pretty strong resistance area. And that resistance area can be seen better as I take this chart and I condense it. If I can actually condense it, we can move it over. But this is a 50% retracement, 38% retracement right here at 1600. And this retracement is a pretty large retracement in terms of the starting point. The starting point is right in this area, all the way up to our record top. Let me go back to that. And so you can see that as this market itself comes back up, this is that 1600 area, it's absolutely having some difficulty genuinely making it over that area. And traders have gone ahead and converted it back into a daily chart so you can get a better sense or feel. Now, as you can see on the daily chart, it hasn't even turned green yet. It is a lagging indicator when you're using the average charts, and so you really have to increase the timeline. In other words, go to an intraday chart to be able to see a turning point, because by the time we see it in the daily chart, of course, the turn itself has already happened. Now, of course, what is driving this market is the dollar, and the dollar continues to gain strength. You can see the weekly chart. It is up on the week. Of course, we're only talking about a couple of days when we look at our daily chart, though you can see it's been very, very much a consolidating market. That doesn't indicate so much that there's a reversal at hand as much as it is consolidating to a point where it is regathering some strength before making its next move. It could easily begin and trend higher. But as I said, my concern now with this long, we're in at 88, but my concern now, of course, is the fact that it's beginning to meander and, more importantly, beginning to really consolidate and trade in that defined range. I personally believe that silver and gold, if we can't see a higher market as we get closer into the holidays, we might get that last leg down. Now, it should be quiet here through Christmas, but one never knows when. We're analyzing this market, of course. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.